Time now to dig into some earnings. We're going to take a look at Intel as its fourth quarter results are just hitting the wire right now. Get you those reports. Q4 EPS, I'm looking for 15 cents. That looks like a beat. Q4 revenue, $13.67 billion versus an estimate of $13.43 billion. So that's a beat. Just looking through the segments quickly here. Data center and AI revenue for Q4, looks like $4.74 billion versus estimate of $4.42 billion. So that looks like a beat. Client computing revenue, $8.19 billion versus estimate of $8.3 billion. So that's a bit light. Importantly, turning to the forecast here, Q1 adjusted EPS. For Q1, that looks like a miss versus a consensus. I'm just looking for Q1 revenue forecast. That's 11.7 to 12.7 billion. The street is at 12.56 billion. So initially here, off that print, you're down a quick 5%. Of course, remember the stock had been a rocket ship heading into this report. It was up more than 40% this year to date. It was up around 150% over the past 12 months heading into the print. So sentiment was positive. Analysts, I know, were talking about reasons for the move here into the print. They would talk about that 18A manufacturing process. They were talking about hopes for the foundry business, that chip manufacturing arm. They would point out the favor of the Trump administration toward Intel. That doesn't hurt. Looking ahead beyond the print, I think you're going to have a lot of questions about expectations for the PC shipments this year, expectations for the server market, any more color we may get about 18A yields and that foundry business. I know some of the street wondering where they may have to move up their CapEx plans. But initially here, off what looks to be some weak guidance, we see the stock down about 4% in the after hours. Initial thoughts here, Bob. They did just report. I see the stock's down about 3% here. What's your initial take on the print?
Well, I mean, look, obviously the forecast is a little lower than people were expecting. That's a bit disappointing. But I'm, just kind of quickly trying to scan through it there. It looks like there's a couple interesting things that, they're pointing out. They're talking about inventories being low. We know that in general, capacity across the semiconductor industry has been limited. So I'll be curious to see if there's more commentary in terms of, what they're saying about the ability, their limitations in terms of what they're able to sell because of inventory. So that's something we're going to have to be aware of. Obviously, there's, if there is any color on foundry, I will say a couple things though. One of the things that's been leading, I think, to that big run-up that you were just talking about is this recognition that the server market across the board has been showing signs of strength. And I think one of the big things is sort of the psychological recognition that CPUs actually matter in AI compute, right? We've all been focused on the GPUs, and of course that continues to be a huge part of it. But as you get these more complex systems, CPUs become a really important part in terms of connecting with the networking and the storage, and because these systems are growing beyond a single rack to multiple racks, and then how that all gets handled becomes a big deal. And also, I think there's a comment in there from Zinsner about something about their ASIC business growing. So that's around networking chips. So that's an interesting sign. So, I think there's a couple interesting factors there. Will also be important to see what they say about general uptake of Panther Lake. I will say it was very well received at CES. Initial reviews of the systems look positive. So that's a good sign for 18A, which theoretically bleeds over into the foundry business as well.
So just give a bit more color on that forecast, Bob. First quarter revenue, 11.7 to 12.7. The midpoint of that range does fall short of the 12.6 that analysts had penciled in. And the company expects to break even in earnings per share ex certain items. The street had projected a profit of 8 cents. So there's your weakness. In terms of manufacturing yields, a bit more color there for you, Bob. CEO Lip Bhutan, it looks like, gave an interview to Bloomberg. Demand, he's saying, quite strong. Company's working hard to fix its manufacturing problems. He says, our yield and production manufacturing are not up to my standards, he said, and we need to improve that. What's your take on that color?
Well, I mean, obviously that would imply that you're not getting the capacity, the yields that they need, which means they don't have the supply that they need. So that could be a factor here in terms of what in terms of both their existing sales and then the forecast. If they don't have enough chips, even if the demand is there, they can only sell so many things. So, we'll have to definitely see what he has to say about that. I mean, 18A is an early process. It's their obviously most advanced process, puts them on the same level as TSMC in terms of technical manufacturing capabilities, but it's new. I will say they said at CES that they were surprised and pleasantly surprised they could launch all 3 versions of Panther Lake beforehand. So that would suggest that something is going right there. But yield rates are those kind of numbers that we only hear about after the fact. So again, like you said, it'll be interesting to hear what he has to say. But if they can get that yield up, and obviously they've got to continue building out those server parts as quickly as they can, that's going to be important. The cloud that hangs over all this, unfortunately, is the DRAM stuff. Even though Intel doesn't use DRAM in their parts and obviously doesn't manufacture DRAM, you got to have DRAM to build PCs and servers. And so there is also that question mark of how much of an impact will that DRAM cloud overhang, and is that impacting their forecast?
Yeah, just to add more color there, Tan saying here in that interview that Intel faces an execution challenge. We are laser focused as a team to improve that. He said, to be candid, it's just our execution needs to improve. Let me also ask you, obviously a key question for Intel, Bob, is just that PC market and how healthy, how resilient you think it's going to be. What do you think PC shipments are going to look like in 2026?
Well, look, if it wasn't for DRAM, I think PC shipments would be incredibly strong. The DRAM thing does raise a question mark. A couple things I will tell you. I did some research last fall on amongst enterprises on AI PCs, and even though the sales haven't been huge, people believe they're incredibly important because they expect this idea of hybrid AI, where you do AI both in the cloud and on the client, to grow, and I think that's going to drive a lot more growth in AI PCs. The other thing I will say, I had met with every single major PC vendor, with Dell, HP, Lenovo, all of these guys. They all had very positive things to say about Panther Lake. And to me, that's important too, because look, last year, Intel faced a lot of, big questions, sort of that philosophical question of, hey, can we rely on these guys? Can we trust these guys? And when I walked away from those meetings at CES, I was like, okay, Intel's back on track. They're figuring this out. Obviously, they're having some challenges that Lip-Bu's talking about. But I will say that their core customers in the PC business seemed much more confident in Intel than I've seen them, to be honest with you, in quite a while. So to me, that's a positive sign. How that translates into dollars and cents, obviously, it still is a question mark. But psychologically, I think that's an important barrier for them to overcome and gives them, I think, a positive sense moving forward.
Bob, as always, appreciate that instant analysis and insight. Thank you, sir.
Thanks, Josh.